Let me ask you something. Has this ever happened to you? You build a trading system. You backtest it. It looks incredible. The equity curve is smooth. The drawdowns are tiny. The win rate is high. And you think, this is it. I cracked it. Then you go live. And within weeks, it starts behaving differently. Within months, it's barely recognizable. And suddenly you're sitting there thinking, what happened? I'll tell you what happened. You didn't build a system, you built a trap. And today I'm going to show you exactly how to know if you over optimized your strategy and, more importantly, how to stop doing it. We've all been there. You're planning a vacation. And I mean a master vacation. You think you're the king of vacations planning. You decided to include every activity, every detail. You even put things like what would happen if something doesn't work. So you think, I thought through all the details, and now you're just waiting for vacation to begin. And the reality hits you hard. Things did not go the way you planned them, and you had to adjust on the fly. And the adjustments didn't work out the same exact way as you thought it would. Was it a ruined vacation? Not necessarily, but was it what you planned it would be? Not at all. It was close, but not identical. And most importantly, it might have been not as good as the plan had it. If you've ever created strategies before, and I call them systems, you know what I'm talking about. You start simple. Maybe it's a moving average crossover. Then you notice some bad trades, so you add an RSI filter. Then you notice a few more, so you add a volatility filter, then maybe a trend filter, then a time of day filter, then a day of week filter, then a news filter, then maybe you optimize the parameters, and every time you add something, the backtest gets better, the drawdowns shrink, the win rate improves, the equity curve gets smoother, and you think, I'm reducing risk. But what you're actually doing is creating fragility. You think you're avoiding bad trades. You think you're protecting capital. You think you're being intelligent. It feels logical. Each filter has a reason. Each rule makes sense. But markets don't reward logical explanations. They reward robustness. And robustness does not come from precision. It comes from tolerance. That's the part most people don't understand. Let's define this clearly. Over-optimization is when you fit your system so perfectly to the past that the future rejects it. You are no longer modeling behavior. You are modeling noise. Every historical dataset contains randomness, random price movements, random volatility spikes, random anomalies. And when you optimize heavily, you're not filtering risk, you're explaining randomness with rules. And randomness doesn't repeat. Here's the technical reason this happens. Every parameter you add reduces degrees of freedom. More filters mean fewer trades, smaller sample size. And when the sample gets smaller, randomness has more influence. And when randomness has more influence, you get false confidence. You didn't remove risk, you concentrated it. That's why the system collapses when conditions shift even slightly. Imagine your system's performance as a mountain. If it's robust, performance sits on a wide plateau, meaning you can slightly change parameters, and performance remains stable. But if it's over optimized, performance sits on a sharp peak, a razor blade. Change one variable slightly, and everything falls apart. If your performance lives on a razor blade, it will cut you. And most traders don't test for this. They test for performance, not stability. Let me give you practical signs. You likely over-optimized if changing one parameter by a small amount ruins the results. Out of sample performance collapses. Your strategy performs well only in one specific market. Live trading immediately diverges from backtest expectations. Or worse, You need to explain why it's temporarily not working. That's usually ego talking. Markets don't care about your explanation. Here's the deeper issue. Optimization feels like control. Human beings hate uncertainty. When we add rules, we feel safer, we feel smarter, we feel in control. Complexity feels intelligent. But complexity is often just insecurity disguised as sophistication. Let me say this clearly. Complexity makes you feel smart. Simplicity makes you money. Markets evolve, volatility changes, correlations shift, macro regimes rotate, liquidity flows differently. The more precise your system is, the more dependent it becomes on specific conditions. But simple systems capture behavior, not exact circumstances, and behavior repeats. Human fear repeats, human greed repeats, trend persistence repeats, volatility clustering repeats. The simpler the structure, the more tolerant it is to change. You don't want precision, you want tolerance. Let me give you a comparison. Strategy A. Three conditions: win rate 42%, drawdown slightly uncomfortable, equity curve a bit messy. Strategy B, 11 filters, win rate 63%, beautiful backtest, smooth equity curve. Which one survives 2008? Which one survives 2020? Which one survives a volatility regime shift? Usually, the ugly one. Because it wasn't over engineered, it wasn't over explained, it wasn't optimized to perfection. It was designed to survive. As complexity increases, backtest performance improves, but forward reliability decreases. There is an inverse relationship between optimization and robustness. The more you chase perfection, the more fragile the system becomes. That's the paradox. The better it looks, the more dangerous it likely is. So, what do? First, reduce parameters. If a rule doesn't dramatically improve robustness, remove it. Second, look for performance plateaus, not peaks. You want wide, stable zones. Third, test across markets. If it only works in one instrument, it's probably curve fit. Fourth, accept lower win rates. High win rate systems are often heavily filtered. Lower win rate with strong payoff ratio is usually more robust. Fifth, stress test it. Change data slightly, shift parameters slightly. If it collapses easily, discard it. Your job is not to design perfection. Your job is to design survival. The goal is not highest return, highest win rate, most beautiful equity curve. The goal is durability. Because if a system survives long enough, compounding does the heavy lifting. Remember what I said in the beginning? The moment your strategy becomes dangerous is the moment it looks perfect. If it looks flawless, it probably won't survive. The simpler the strategy, the better the outcome. It's been like that, and it will stay like that. That's the truth. Make sure to sign up to our channel and like the video to get more information on systematic trading gotchas. And if you have any specific questions, then you can write back to our email info at Trading Systems. Come and check out our website for more free information, such as free course. It will give you a lot of explanations on how this whole thing works. And to have a real deep dive into the world of systematic trading, I'd highly recommend you to read our books, which are available on the Amazon. This will give you a step-by-step instructions on how to build the appropriate systems and avoid the over-optimization altogether. Otherwise, I'll see you in the next video with more systematic trading topics. Bye!